industry. Mr. Pavan Goenka joins us now from M&M. Mr. Goenka, appreciate you joining us here on CNBC TV 18. First up, sir, it's not clear whether cars will fall under 28% or not, but luxury cars will certainly have a cess that's imposed on them. Your first reactions on what you've heard from the Finance Minister on the GST rates that have been finalized?
Well, I think to have 4 GST rates at 5, 12, 18, 28 is a reasonable thing to do. So to that extent, I don't have any concern. Where my concern is what is the standard rate? And I thought 18 was the standard rate. And I thought most goods would fall under 18. Unless there is some kind of luxury or premium.
Two standard rates now, Mr. Goenka. There's a 12% standard rate and there's an 18% standard rate. So that has been the clarification that's come in from the Finance Minister.
Okay, and that's the reason I'm a bit surprised that even small cars are talked about as being in the 28% rate. Because 28% rate means that the GST simply becomes the current excise plus VAT. And in fact, it probably is even marginally, fractionally higher than current excise and VAT. So all the expectation that was there for a long time, that with the GST rate, the prices will come down because there is a wider collection of taxes, and therefore highly taxed goods will be taxed lower. That expectation goes away, and the cars will therefore not have any kind of price reduction. And therefore, one expectation we had was that that will lead to higher growth in the industry. That perhaps will be taken away. The second benefit of GST still hopefully remains, that it does simplify, makes India as one market, and hopefully that will not get compromised and will remain. But 28% as the standard, 28% rate for even small cars is certainly disappointing, and I would have expected that to be in the standard rate, whatever that was.
Okay. Mr. Goenka, your disappointment is just that it has not gotten lesser, but no worries that rates on cars have gotten higher, right? At 28, it's still where it is.
28 is still where it is, but till few days ago, the expectation certainly was that it will be in the range of 18 to 20.
Okay. Well, what do you sense is the preparedness? April 1st, good to go, you think, in terms of your own software and your conversation with the government, with the bureaucracy?
I think as far as we are concerned, a lot of work needs to be done, but we will be prepared for April 1st, provided all the details are known to us at least 3 months in advance, and we should not be waiting for the fine print until the last week. So if the fine print is available to us in detail by, let's say, end of December, then we should be ready for 1st of April.
The fine print should be available, sir, by then, because the draft legislation will be finalized in the meeting on the 9th and the 10th, and then, of course, this will be passed by Parliament in this session. But, Mr. Goenka, I wanted to ask you specifically, as far as your own product portfolio is concerned, sir, because SUVs are treated differently on the excise front. They have a higher excise. That's Mr. Chidambaram's gift to the industry. But now, as far as the cess is concerned, are you likely to fall under the cess bracket? What is the clarity that you have on that front?
I have no clarity right now. I mean, all I know is what I see on TV right now. And from that, what is said is luxury cars would have cess on it. And certainly not all SUVs are luxury cars. And therefore one will have to see to kind of wait to see what the definition of luxury would be. If it is on a price point, which is the most sort of reasonable way to define luxury, then certainly it has nothing to do with SUV or car. It will be based on goods that are premium goods or price above a certain level, whatever that might be.
But what is the current tax incidence, sir, on your products?
We have products in all ranges. We have products that go into the small car range, which is currently 12.5% excise duty.
No, on the SUVs, sir, on the SUVs.
So it's nothing to do with SUV. It has to do with the size of the vehicle and the engine capacity. There is nothing like SUV as a category. So I think there is always a misconception that SUVs are taxed more. It is to do with size and length, and those vehicles that are falling above 4 meter or above 1.5 liter diesel engine get taxed at 24% excise plus 12% VAT.
Mr. Goenka, if there were a higher tax incidence on any of your products, you think you will be able to pass it on?
We have to. I mean, look, tax we cannot absorb. Neither do we keep nor we absorb. So,
Okay.
so if there's any tax difference, whether it goes up or goes down, in terms of GST rate versus the current VAT and excise rate, that will be passed on. Either if we save, we pass it on. If we have to pay more, we pass it on.
So your P&L is GST neutral?
P&L should be GST neutral, therefore.
Okay.
But there are other benefits of
Mr.
GST.
Goenka, just one point, sir.
I'm not undermining the value of GST because what the industry was excited about were
Sure.
two things. Potentially rates coming down, but at the same time, also the ease of doing business that comes with GST. And I had said often in my interaction that what I'm looking forward to is more than the rate, I'm looking forward to the ease of doing business, where the whole country is a single market, where we don't have to decide on our warehouses, on our stockyards, on our sourcing location based on tax consideration, but based on what is most efficient. So hopefully, I'm saying hopefully because I still don't know the fine print, hopefully all of that will remain. And that is the real value of GST in many ways, not the tax instance, because as we are finding out right now, the government of India wants to more or less maintain the tax GST at current VAT and excise.
Yeah, we still need clarity on from the government on how the classification will be done, sir. But the finance minister did say that there is consensus that items that currently fall under the 30 to 31% tax incidence will be taxed at 28%. The non-small cars, i.e. cars which are more than 4 meters and more than 1500 cc, currently the tax incidence is about 27%, right?
That's right. That's right.
Okay. So you are hoping that luxury will be defined by price and not by engine capacity or length?
Well, it has to be. I mean, it's very well established. The government of India itself has argued earlier that you cannot be having engine capacity cut off to decide on a ban or a luxury. Because engine capacity does not define luxury. In fact, some of our least luxurious vehicles have the highest engine capacity. So therefore, that is not a criteria by any means, and it cannot go by. It'll really be very unfortunate, I must say, if engine capacity is used to define luxury.
Okay. Well, Mr. Goenka, just a final point. Now that you know the rates and you know the cess, although you still don't have details as to which of your products will be in the 18 or in the 28%, do you say net you're satisfied with the way things have progressed? We are getting into a better regime?
Well, it's a very difficult question to answer right now because what was announced today was a bit of a surprise to me because I was not expecting that all cars will fall under 28%. So I want to hold my judgment till after I see everything, all the details, before I make any statement.
And if indeed all vehicles, all four-wheelers are in the 28% category, what would be your assessment?
Well, it will have partial benefit of GST, which is the ease of doing business, as I said earlier, which is not a small benefit. It's a very important benefit for auto manufacturers because we have a fairly long backward and forward integration, and therefore it's a very important benefit.
Sure.
But the likely benefit of lower prices and therefore higher growth will get dissipated. So it's a mixed bag.
Mr. Goenka, always a pleasure speaking with you, sir. Thanks very much for joining us. And